All right, now for a little bit on the precious metals, namely silver. But there's gold, because I like to cover silver. That's my metal of choice. But gold and silver, they go hand in hand. So this is from, I think, Zero Hedge. And it said right now, this is some commenting from them. Right now, you need to understand something very, very important. Friday, the December, first notice of trading, paper trading, which means you have the chance to take your futures contract and sell it before the final notice, or roll it into the next month futures contract or whatever, or demand delivery and get the gold or silver. So Friday, the 13th of December, is first day notice. Well, hold on, let me back up. That's not entirely correct. First day notice for the December 13th, I guess, contract is Friday, November 29th. So that's next week. That's just 1 week away from Friday. Expect extreme volatility in the days ahead. Though JP Morgan is net long now, finally, in gold, and may stand for delivery in December of a significant number of contracts, enough that could break the COMEX, by the way, if they so desire. They may not, of course. They may simply choose to stand pat and roll their position into 2014. If and when they do so, there is no easy way for them to accomplish this feat without disrupting the market. And given their track record of price manipulation, we must expect them to, what he's calling, leg out. And what does that mean? He says, instead of simultaneously selling a December 13th contract and buying a February 14th for minimal to zero price impact, JP Morgan may choose to dump 5,000 or 10,000 contracts at a time. This would set off an enormous waterfall cascade of follow-on speculative selling, into which JP Morgan buys their 5,000 to 10,000 February's and April's contracts at an enormous discount to where the price was just minutes earlier. You must understand that anything is possible over these next few weeks. The price of gold could skyrocket as JP Morgan stands for an enormous amount of December deliveries. The price could also plummet to a retest of the approximate $1,180 low as JP Morgan legs out and rolls their position. Anything is possible. So seeing what's happening right now, with the prices going down, it's almost to that, it's 1260 something, 1250 something for gold right now. It may look like they're going to smash the market, buy it up cheap for the next contracts starting next year, so that they can then ride that to the top. And that might be when we could expect the precious metals to really start rising early next year, if this is how it plays out. Another thing kind of attached to this, separate thing, in his interview with Peter Spina, Eric Sprott discusses the unprecedented silver consumption. All right, I'll be right there. Homemade ice cream's ready. So he says, unprecedented silver. They're discussing the unprecedented silver consumption by India for investment purposes, not electronics, not for investment purposes. As the Indian government cracks down on gold imports. So because they're cracking down on gold, people are saying, well, let's go to the little brother and go get some silver. And that's exactly what they did. And how India's 4,000 ton increase in silver demand this year alone is likely to affect the silver market going forward. Eric views the current price action in silver as extremely counterintuitive considering the physical supply and demand fundamentals, and states that to see the price of silver go down in this environment as India consumes an additional 30% of global investment silver supply just blows me away, he says. He also says, this trend simply cannot continue. You can't have India suddenly consuming 15% of the global market, people in the U.S. buying all-time record amounts of silver, and put the same amount of money into silver as gold. Those things cannot continue to happen and the price of silver just stay down. He's absolutely right. But when you rig the price on Wall Street, on the COMEX, That's how they do it. But again, you can only do it as long as you have the physical silver to put out those fires when people start asking for delivery. And as we've already seen, there's been a few times already, in the last couple of years specifically, where there were shortages and delays and major delays of people getting their silver and gold that they've demanded, mainly silver. So I think we're in for more of that until the point comes where it's just something happens where they just can't keep up, and that's it. Just delay all you want, it doesn't matter anymore. That's when the price setting mechanism will fail. That's also the time you better hope you have precious metals. Take care.